Welcome to this video day, which is on the 22nd of January. It's Sunday. What we're going to be doing today is just doing some very simple chart analysis in association with the CFTC net traders positions as a backup tool. And it's all pretty simple in terms of the way we're going to look at the charts. Now, I've done a few videos on CFTC net traders this year. Main focus has been on the USD JPY. CFTC net traders indicated or warned of a top when we reached 118, and the USD corrected to the downside really nicely. Now it's had a little bit of a rally, so I'm just going to give my updated view on USD JPY. But I'm going to really focus today on AUD JPY, which I think could offer a really good risk to reward trade. Again, we're going to be using the CFTC net traders as backup. Now, in terms of the charts, we'll look at them now, starting with USD JPY and updating our view. And then after I've looked at the charts, I just want to make some points to do with Forex market analysis. But first of all, let's take a look at the charts. Chart of USD JPY daily. I'll just go through the levels that I've drawn in a moment, why I've drawn the way I have, or where I think prices could be going. But first of all, let's look at the latest CFTC net traders report. For new viewers, I'm just going to give a quick overview of them. If you're familiar with them, you can basically wind forward for about a minute and a half. Right. In terms of the positions, why do we consider them important? Well, basically, show futures positions on the Chicago Mercantile Exchange. It's a sizable part of the Forex markets. It's big enough to give us an idea if a currency is undervalued or overvalued by simply looking at two groups on the report, and I've highlighted them. You have the non-commercials in red. These are large speculative funds, hedge funds, managed currency funds, etc. They tend to be heavily net long historically at important market tops and heavily net short at important market bottoms. They don't have a great performance of catching market turns. Now we want to compare their positions with the commercials in green. They're the smart money. They are hedgers. Okay, they're simply hedging a cash position. They're not making or losing any money in the markets. What they do have, though, is a very objective view of Forex markets, and basically have a deep understanding of the fundamentals, and they know when a currency is run too far to the downside or too far to the upside. That's the only time they're going to move their hedges aggressively. Keep in mind they're not making or losing any money. So what we want to do is see how the two groups line up against each other. So what do we got this week? We've got non-commercials, bullish bets on the yen, 28,560. Short bets on the Japanese yen, or bearish bets, 106,390. So basically they're nearly 4 to 1 in favour of bearish bets on the yen, so they're basically bullish the USD. Commercials on the other side, 164,514 bullish bets on the yen, 57,301 bearish bets on the yen. So they're 3 to 1 bullish in terms of their ratio on the yen, or basically wanting to be short USD JPY. Now, this is the latest report. I just want to go back to the start of the month and compare the positions now with then. Now, when we broke up strongly to get above 118, these ratios were 3 to 1 then, okay? So what we did see was obviously, we travelled down a bit, got back up, tried to break out above 118, came back through the number. That's where we decided to sell. And then you have a really nice move to the downside, and you see this red candle here. I've highlighted it. It's the day this report was compiled, i.e. last Tuesday. So you've got the commercials, still bearish of the USD JPY. They're not aggressively moving their hedges, and the non-commercials are bullish the USD JPY. Okay. Now, in terms of the rally, we've seen a nice rally. Last week I said I thought we'd get down to 111, but there could be a rally. There has been a rally, unfortunately, as we're bearish of this pair. Anyway, she's come up, okay, and what we've done is we've now got a resistance line here, which is about 115.60. Top of the tail, top of the tail, top of the tail, two bodies, tail, two bodies, couple of bodies over here, and almost in line with that body there, and also the top of that candle there. So you've got good resistance here. So in terms of our view of this pair, still remain bearish of it. What you've got obviously is this level of resistance here. If it is broken, I'm sure a lot of people are seeing this as resistance, we can easily run up to the round number. That's where I think we would fail. Okay, also got the 20-day moving average. So if you've got above 116, you'd sell her back through 116 if you're not in the pair, in my view, or take her through this low here. If she gets through 114, she'll move to the downside. Now, in terms of the first level of support, actually let me draw it in. It's actually, in our view, the 111 level. I did this off the longer term charts in the previous videos. I won't do it now. It is 111 if I could draw a straight line. So that's the first major level in our view. Drawn another level here. Why? Because it's a Trump election breakout on this blue candle reversal here. Now, if you take the view that the markets are moving from risk on to risk off, which we do, then we could easily come all the way down to this level. 111 is the first support level, but a longer term level targeted, which could be targeted, is this level here. So our view is we've got a bearish bias. It's been a good run down. It hasn't. We have had a rally now, but in terms of non-commercial and commercial positions, we think there is more downside to come. Sure, we could pop higher in the short term. The yen or USD JPY can be a wild contract, as we know, but we have a bearish bias. Now what I want to do is go and look at the AUD against the JPY. A monthly chart of AUD JPY, just to look at the big levels before we go to the daily chart. Okay, now in terms of the Aussie, nice downtrend here, and then we've made a rally. Okay, now in terms of resistance, if we look at this red candle here, we had a big rejection. Okay, high is 87.52, blue candle coming back up to test the level. So 87.52 is the level of resistance, but we know that obviously round numbers obviously tend to attract price. So I think you could say that the major resistance is the top of this candle here, 88. So 88 for us is the line in the sand in terms of if it closed above that level, that would negate our bearish stance. Now, in terms of support, where is it? You've got three candles here, wick or tail there, two bodies. It's about 86.20. It's near round numbers. You could say 86 is the key support level. So 88 key resistance, 86 key support. Where is the near-term support? I think you'd say 84. However, I've drawn our target down at 80. The reason I've done that is that's the breakout on the Trump rally. And I think I've said it in other videos. I think that the Trump rally has run too far. We could see some risk off, and that will mean a lower Aussie dollar. Now, they're the big levels as I see them on the monthly chart. Let's switch to the daily chart and look at the CFTCs as well. Okay, here we are on the daily chart. Let's have a quick look at the CFTC net traders. Now, what I've done is I put up the Aussie dollar against the US dollar to see the ratios. Then we need to cross them through the ratios of USD JPY, obviously, to get how the commercials view the cross rate. Now, in terms of non-commercials, 42,000 odd long, 37,000 odd short, about even. Commercials, 24,000 short, long, 21,000 short, about even. They both got a slightly long bias. What we do know from reading this report regularly, though, is the commercials will start to sell the Aussie dollar more now. It's rallied, and you can see it's already started. They were net long the week before by nearly 3 to 1. They've actually liquidated 12,198 long positions. Okay, so we got, just for the sake of easy calculation, we got evens on this report, and we got 3 to 1s on the other report. So the cross 3 to 1 with the commercials favouring the yen over the AUD. Now, if we go to the chart, what we've got here is obviously we can see this poke above 87 to 87.52. We can't see obviously going further back. We've done that already on the monthly chart. We've already said 88, the round number. If we close above that level, that would negate our bearish stance. Okay, so if the Aussie dollar would go above 87, target this candle, we would sell it back through 87. Okay, and the stop will be back from 88. Now that's if we break higher. If we break lower, I've drawn the level of support top of these two candles here. It's about 86.20. If we got a bit more confirmation, you could come through the bodies, come through, let's say 85.80. We broke that level, then the stop, I think, could just be behind 87, probably about 87.50, something like that, well back from the round number. Okay, now if we do start to break lower, you obviously have this support at 84, which we noted on the monthly chart, but yeah, this support level here at 80 could be targeted. There's the reversal on the Trump rally, and off she goes. The move to risk off, this Trump rally could be completely retraced. So in terms of AUD JPY, if it goes higher, we'd expect the breakout to fail. If it goes through support, we'd expect it to go down to 84 and then possibly even 80. So that's what we think of AUD JPY. I'll come back after that short summary there. Now, in terms of my view, that's my view right now. Can obviously change in line with the market conditions. If you want our daily charts and analysis, you can simply click on the link beneath this video. Now, in terms of, just for new viewers, in terms of CFDC net traders positions, you can't just follow the commercials, okay? They are not making or losing any money. They're just hedgers. They could be wrong in the short term. It doesn't really matter to them. Of course, from our point of view, we need to use our technicals and good stop protection. Now, in terms of the report, it takes a little while to get used to reading it, and how the different groups move, and what ratios are relevant in each currency pair. They're all subtly different, but it's something you soon get used to. Gives you clues to where the chart might be going, and also I think for me certainly it always focuses me on the big levels on the chart. A lot of people write to me and say you don't draw many lines on your charts and you don't do anything really complicated. The answer is no, I don't. But for the illustration purposes in this video, I haven't used any volatility or momentum to confirm moves, which I would normally do. However, it's all personal preference. You can do it with just pure price action, in my view. And in terms of levels on a chart, you just want to focus on those really big levels that matter, okay? And you can get them by looking at a weekly chart or a monthly chart, looking at the big levels, then lining them up with the daily charts, okay? There is, and I've said it before in other videos, a sort of thing with beginners coming in the markets, just do lots of lines on a chart, support and resistance levels, just through absolutely meaningless levels. You want the big levels that matter, okay? So you can have a nice clean chart. Obviously, in terms of confirming through levels, we all do it in different ways. I use, like I said, volatility and momentum. Other people use price action. But what I would always say is that if you're using stops, never have them too close to a round number, and always have them a little back, from any level of resistance, just so you don't get, if you really believe in a position, give it a little bit wider to stop, okay? For me, seeing traders should be, a technique that traders should learn, in my view, because it's just so valuable. Of course, the report is free as well. Just takes a little bit of time to get used to the report, but that's time well spent, in my view. I think I've covered everything that I was going to cover in this video, so that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.